So you find yourself, you have sales, you have customers, people are actually buying from you. But so why is there no money? That's the question you keep asking yourself. You are busy, you are working, you're showing up each and every day, but at the end of the month, you cannot clearly see the money that you are working for. And we know that how frustrating that can feel because most businesses are actually there at this moment. Because from the outside it looks like things are working, but on the inside you feel the pressure. And today we want to talk about that gap or filling that gap so that you can start seeing what's really happening. We have our in-house expert Jane. Hey,
Hello,
how are you?
I'm fine.
So I'll begin with the first question. So
Yes.
why do many businesses have customers but still don't make money?
Wow, right to the point, yeah?
Yes.
And actually, it's a very important question
Mm-hmm.
that every business owner needs to understand, yeah?
Mm-hmm.
And sometimes you can feel like you're doing it
Mm-hmm.
and you're not actually alone when you're doing that.
Mm-hmm.
If I can answer the question, yeah, because many businesses, if you look at it, yeah, they focus on selling, they focus on posting, they focus on marketing, they focus on service customer. I mean, serving customer, what we call customer service, yeah.
Yeah.
And all that actually matters. It really does, yeah. But activity is not the same as profitability. And this now is where most of us are get, or rather the confusion begins.
Mm-hmm.
Because someone will say, I made 100,000 this month.
Uh-huh.
But when you ask them, yeah, how much did you actually keep? And that is, there's never a clear answer to that, because there's always that gap. Many entrepreneurs are measuring revenue basically, but not understanding profit. And if you don't understand profit, you can keep on working very hard and still feel like you're not moving forward. And that can be very discouraging, yeah, because you're putting effort, but you're not seeing the results.
Okay, so let's break that down.
Yes.
What's the difference between revenue and profit?
Wow, you want today I'll be very practical in terms of numbers, but let's make it very simple, yeah? Revenue is the money that comes in. Profit is the money that remains. For example, you sell products worth 100,000, yeah? That is your revenue. But now let's go deeper and look at the numbers properly, yeah? From the 100,000 that you have sold, yeah? Let's remove all the direct costs that all the direct costs basically, yeah, that affect that number. There's something we call cost of goods, and that is the first step. In our side we call it COGs, yeah. So let's say, for example, your stock is 50,000, yeah? So now you take the 100,000 that you had made, you subtract 50,000. What remains is the 50,000. This 50,000 that remains is not your net profit. It's basically your gross profit. Then step 2, let's look at operating expenses. Now from the 50,000, after subtracting the COGs, yeah, you remove all the business expenses. Let's break it down. Maybe you have rented somewhere, you have transport, you have staff, you have packaging supply. Let me give them a number, yeah? Maybe your rent, you're paying 15,000. You're doing transportation, maybe to supply your goods, and maybe you give it 5,000. You're paying your staff 10,000. You're doing packaging and supply, that is maybe 5,000. You're doing marketing and promoting ads, that maybe 5,000, yeah? When you tally all your business expenses, and those are just examples, I'm just doing it on an example, so you tally depending on your business, that brings it to 40,000, yeah. So now remember the 50,000 that remained, you now subtract the operating expense, the 40,000. Now what remains is 10,000, and that 10,000 is now what we call the net profit. So from 100,000 revenue, you're left with 10,000, and that is now what we call the net profit. There's something we call profit margin. If you take now, for example, the 10,000, you divide by the revenue, that is 10%. So you often hear people saying, I've made a 10% profit margin. So that is how you come, how you do it, or rather. And for many businesses, it's even lower. Sometimes you can do your profit margin, it becomes maybe 5%. Sometimes you can do it and becomes 0%. And this is now where it becomes very dangerous, because if anything changes, like sales drops slightly, costs increase slightly, you are now in a loss. And that is why I always say this, yeah? A busy business is not the same as a profitable business. Please don't rush stones to me. But honestly, a busy business is not the same as a profitable business. You can be selling on a daily basis, but still be struggling financially. Now, when we look at this from a financial perspective, because that is where I'm coming from, there are key numbers every business owner should actually understand, or must understand. Number one, gross profit margin. And how do you get gross profit margin? Basically, revenue subtract cost of goods, then you divide by revenue. Remember, like our COG was 50,000, and our revenue was 100,000. So you take 100,000, you subtract 50,000, you divide by the same revenue, 50%. That is now what we refer to, and actually that is now what will actually tell you this is how you have priced your product. Then the other thing, the second number that every business owner should know is the net profit margin. And how do we get the net profit margin? You remember that I had done it earlier. It's basically profit divided by revenue. What was remaining, and this one should be the net profit, not the gross profit. You take the 10,000, you divide by 100,000, you get 10%. That is the net profit margin. And this tells you, is your business actually making money? And finally, the break-even point. This is the level whereby you are not making a loss, but you're not making a profit either. So if your expenses are 40,000, you must make at least 40,000, so that at least you have a break-even point. And anything below that one is now you will be operating at a loss. So basically, those are the major three numbers that every entrepreneur and every business owner should know. Because when most of the entrepreneurs, or rather where most of entrepreneurs are, they are working very hard, but operating very closely to break-even point. And so even just a slight mistake of maybe supply increasing prices, or maybe something just happening, it causes a lot of big impact on your business. And once you understand these numbers, everything now starts making sense. You stop like guessing, and you start managing effectively your business.
Okay, you've talked about the break-even point, and something has clicked. Like right now, when the fuel prices are high, so it kind of affects the business, right?
A lot. When it comes now to the fuel business, it's actually in depth. If it's, I look at the fuel business because I analyze businesses a lot, and sometimes most of our like the entrepreneur clients come and we have to analyze their businesses. In the fuel business, sometimes maybe you had a reserve, and maybe you got the fuel that you had at a lower price. Then you didn't expect a fuel hype. I mean, a fuel hype will happen. So you have to buy new fuel with another different price. You have bought that fuel with a higher price. Slightly, maybe the next day, the prices are lowered. Now you see you are almost, yes, you slightly made a profit when you had a reserve at a lower price. Price is high. You buy fuel with a new price, then you have to sell it at a way lower price. So it's a very complicated, not complicated business, but as long as the owners understand the numbers and how to operate with the numbers, that's all that matters. And you understand where my break-even point will be. So let's not look at it. The fuel business is okay, but all the other businesses that you're getting in goods and something supplier changes and all that. But basically, if break-even point, every entrepreneur should understand. that if I go below this, I'm making automatically a loss. Yeah.
Okay, and so what are the biggest mistakes entrepreneurs are making with money?
One of the biggest mistake that entrepreneurs are making with money, number one, is mixing business with personal money. And that is a very common mistake that we often see and we often find ourselves in, mixing business money with personal money. Money comes into the business and immediately it becomes personal money. And I guess what majorly happens, especially in early stages of a business, when everything feels a bit like we are surviving, but over time it creates serious financial confusion. Because look at it practically, you make 100,000 in sales, and you end up withdrawing 30,000 for personal use, maybe you pay expenses randomly from the same account, so there's no much accountability. At the end of the month, you cannot answer one simple question: is the business profitable? Because numbers are mixed all over. Some you took it, you used for personal use, you paid business expenses without from the same account. And from a financial perspective, that this breaks one of the most important principles: entity concept. Your business must be treated as a separate entity from you. This is your business, this is you. They are not one and the same. Once you mix them, you lose visibility. And when you lose visibility, you lose control. Yes, the second mistake that most often entrepreneurs make is not having cash flow tracking. So when it comes to cash flow, this is the second area where I see a bit of gaps. And hey, I'm talking from also a perspective of experience. I've been here. I've also mixed personal money and business money. So this is the second area. And this is where many businesses quietly struggle. Profit is very important, but cash flow is survival. You can be profitable on paper, but still run out of money. Let me give a scenario, or rather an example. You sell goods worth 100,000, but your customers pay after 30 days. There are some businesses, they give their customers 30-day credit. Meanwhile, you need to buy stock today, you need to pay rent maybe the coming week, you need to pay your staff end month. And so what happens? You have sales, yes, but you don't have cash. You don't have liquid cash. And this is now, it starts becoming a cash flow problem. And this is what I keep on saying, when you're operating a business, cash is king. Yes, if you are not tracking, when money comes in, when money goes out, your monthly obligations, you will always tend to feel a lot of pressure. And many businesses are somehow operating like this, not because they are failing, but because they are reacting to what has not been planned. Yes. And the other third one that I'll talk about is wrong pricing. This one, I'm also here. So my dear entrepreneur, some point I'm here also. But we often find ourselves doing like wrong pricing, and I always I will approach it in a very gentle way, Many entrepreneurs, we tend to underprice our products, not because we don't value ourselves, but because we tend to want more customers. Most entrepreneurs, and like I said, I'm here, they want to compete, they want to grow, they want to be chosen, but let's bring it to numbers, Like I talk a lot, I always look at the numbers, You sell a product at maybe 1,000 shillings, Your COG for your cost of getting that product was 700, So in reality, your gross profit is 300 shillings, But now you subtract the small expenses. Maybe transport 100 bob, packaging costed you 50, marketing costed you 50, and now you're left with 100 shillings. So it means your business is costing, it has a 10% margin. Now imagine this scenario, One price increases from the supplier. You have always gotten that product at 700. The supplier decides to give you at 850. So automatically you will make a loss of 50 shillings,
50 shillings.
if you do the maths.
Yeah.
And you are now at a loss instead of even going to break-even point. So now that is now what I mean, like underpricing. It can be a very big, it can cause a lot of big losses. And I know we really want to compete, we really want to get customers, but underpricing can really mess our businesses. And that's what, in reality, that is what many businesses are facing. So the question is not, are customer buying? The question is the business sustaining itself? The fourth mistake that I often find is entrepreneurs not having financial discipline. And when I talk about financial discipline, this is where money comes in and it goes everywhere. It goes to personal use, it goes to paying expenses without tracking how we are doing. So without no clear plan, with no intentional allocation, with no good structure. And from today I'm talking about from a financial perspective, because hey, my dear entrepreneur, I understand you. I know how tough a business can be. So this is where sometimes a business might collapse slowly, because money must be assigned a role. Every shilling must know where it's going without it just going. Especially on our petty cash, we sometimes might not be tracking it. I'll give an example. The same, if you're making the 100,000, you can have a good structure like this. You say 50% will always go to my COGs, the cost of goods. 30% will always go to my operating expenses, your rent, your all the operating expenses, deliveries, packages, and all that. 10% will always be reinvested back to the business, and now the 10% is now the profit that I'll be making. And there's also another scenario that comes in when it comes to money, but when it comes to having a good structure, I tend to tell every business owner or every entrepreneur, when you're doing that structure, at least have 5% and put it aside as your emergency fund, as your buffer, because anything unexpected thing happening, now that is now where you get that money. And you start now doing good management with money, and instead of now reacting to any expense that comes along. So when we look at all this together, the challenge is not the effort, because honestly, you're already working hard. We are already working hard. It's actually a structure, and once you figure out how to that structure comes in, then clarity automatically follows.
Wow.
Yes.
Okay, so how does someone fix this? What does a healthy money structure look like, especially for a business?
I'm glad you asked that, because this is where things now begin to change, and from a good point, I'll look at it step by step. Step one, separation. Start with separation. Have a business account, have a personal account. And even if you are still a small entrepreneur or a small business owner, start practicing this early, because clarity begins there. What do I mean by this? When you have two accounts, everything comes into the business account. Set aside, give yourself a salary as the owner, and the salary that you give yourself, that is now the money that will be going to your personal account. Anything that you want to do, to buy, to that money now will be coming from your personal account, but not the business account. Then step two, know your numbers. Because when you start knowing your numbers, not just the revenue side, but the cost of goods, all the expenses, the profit, the cash flow timing, even a simple monthly summary can help you do that. Because if you don't measure, you will not improve. And step three, price for profits. I know sometimes this can be challenging because we tend to price lower so that we can keep on the clients can keep on popping in. But that one, we are damaging our companies and our businesses. Ask yourself honestly, is this price that I'm pricing sustaining my business? Your business should be able to pay for its cost, its growth, and you. it can, if it cannot do that, yeah, the model that you're using needs a bit of adjusting. And I know, from a perspective where, like, I operate, like, I have a company that needs to sustain itself. I understand sometimes it's so difficult when it comes to pricing. And so, as an owner, or rather as the founder, what you can do, if that business cannot be able to pay you at the moment, what you do, you write in the books, like, the business owes you, like, it has a loan, like the business has a loan from you. So that when that time comes, when the business is now doing well, yeah, you can start paying yourself the loan from those, all that time the business was not able to pay. Yes.
Okay.
Then step 4, create a simple allocation system. And this is the final step. Yeah, decide in advance what portion goes where. Like, I've given an example prior, and now I'll also give an example. Yeah, one portion has to cover expenses. Another portion is saved, like I've mentioned about having that emergency fund for your business. Another portion is reinvested back to the business for growth purposes, and another portion that is now the profit side of the business. And with this is where now discipline meets structure, because now you're not only like deciding emotionally, you're following a good system. And once you start doing this, yeah, something slightly changes. You feel more in control, you understand your business better, and your decisions become more clear.
Wow.
Yeah.
All right. And what mindset shift do entrepreneurs need to make?
Wow. It all, by the way, it all comes down to mindset. Yeah. This is where growth really starts happening. Yeah, because many entrepreneurs don't fail because they are not working hard. No, many entrepreneurs are working extremely hard. They wake up early in the morning, they sleep late, they serve customers, they serve the market, they deliver, they solve everyday problems. But at some point you realize something important. Yeah, hard work alone, yeah, does not build a profitable business. Structure does, like I've explained before. So the mindset shift is this, yeah. You move from just working hard to thinking financially. You shift from how do I sell more to how do I keep of more of what I sell. You move from how much came in, yeah, to what did the business actually retain. And after having that shift, yeah, you move from like pushing on sales. I'm not saying you shouldn't, but to let me understand my margins, let me understand my expenses, let me understand my cash flow, and let me understand about my profit margins. And I say this very gently, yeah. You must move from a hustle mindset, or rather a hustler mindset, to a business owner mindset. And hey, don't get me wrong, please. All I tend to say, like the way people always look at their business and say, this is my hustle. Actually, this is your business. So the hustler mindset needs to move away and look at it like this is my business and have that business mindset. A hustler focuses on just getting money, just this is money. I'm just doing it for money to keep on coming in. A business owner focuses on managing that business, protecting that business, and growing more money. A hustler will ask, yeah, how do I get customers today? But a business owner will always ask, how do I build a business that can be able to survive for the next month, the next year, and even that a business can be able to survive without me being there all the time. That shifts, that change, or rather that mindset shift changes everything. And I know we like often saying like, yeah, that's my hustle. It's okay, it's your hustle, but look at it from I'm a business owner, and as a business owner, all these questions and all these numbers need to be understood, because now you stop making decisions emotionally, you stop pricing out of fear, and you stop spending just because money has entered in your account. You stop confusing movement with growth, and you start asking like other question: is this product profitable? Is this client actually costing me too much to sustain? Are my expenses growing faster than my income? Yeah. Can this business be able to pay me? Can this business run if I step away? Especially that question. And that now comes into succession planning for our businesses. Can that business survive without you? That is now another, I think that is a whole topic for another time. Yeah, because when you look at succession, the succession planning that we talk when it comes to individual, but there's the succession planning when it comes to businesses. A business needs to survive even when you're long gone.
True.
Or even when you, let's leave even when you're long gone. Yeah, let's even look at if can your business survive when you step away for even just 2 weeks. Am I building a system or just creating daily pressure for myself? So as an entrepreneur, some of those questions are what you need to answer, and those are the very major business like a business owner questions need to answer when they are analyzing their businesses. So yes, sales are very, very important. Customers are very important, and they're always right?
Yeah.
Marketing is very important, but the numbers are what tells you the truth. And if you want to grow, you must become comfortable with your numbers, because a business, that you don't understand, you're operating a business that you don't fully understand financially, will always feel a bit stressful, and you will always feel emotionally drained. Yes. So I want to say this gently, to every entrepreneur listening: you're not failing, you are just learning. And maybe what has been missing all along, it's not like you're not passionate about your business, it's not like you don't have many customers, but maybe what is missing is just having that good structure. And once you begin fixing your structure, and once you begin talking to your numbers and understanding, putting aside that structure, basically telling all your money where it will keep on going, that shift will change a lot. You will understand where your money will start going. You will understand, or rather you will know what to price better. You will know what to stop doing in terms of how you're operating expenses, and you will know what you need to do so that growth can appear, and you will know what actually is your profit margin. And this brings a lot of peace, because now you're not just running a business, you're leading it, and you know exactly what every number means. If you want to build a very sustainable and business and understand the financial side of businesses, we actually do a masterclass for entrepreneurs, and we look at the financial side of it, and not, like I said, not just sales, not just activities, not just marketing, not just customers, but we look at the profit side of the business, the numbers. We talk to the numbers. So if you're listening to me, we have that entrepreneur class. It's part of our series that we started, that we will be doing every month. And so depending on that month, there are 2 months set aside where we look at the entrepreneur side of money. So if you are here as a founder, as an entrepreneur, please comment entrepreneurship class, and we are looking forward to giving you more details on how the class will be. It's at a very discounted price, and I'm looking forward to having you.